please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, overnight, the number of Dow Jones watchers really just grew. In fact, it spiked up overnight because that market was moving around. Just take a look at it. 1,100 points overnight. That's the low of the day. That's the high of the day. In fact, it ended with a gain of close to around 500 points. So after the two-day sell-off, it was good to see that we had green on the screen. What are the top gainers then? You had Goldman Sachs in there. Remember, that's the second largest weight on the Dow. And that as well did end up with a gain of around 3.5%. So Goldman Sachs was one of the key contributors on the upside. Why wild swings? Well, interest rate fears, that was one of them. The second point is that, in fact, there's been a lot of algo trading. And that's the reason why, in fact, the previous trading session, we did see a sharp downtick in the final few minutes as well. Good to see that the bond yield, now that has stabilized at around 2.75% or thereabouts. So there was some stability coming into the bond markets overnight. The volatility index, though, that was the key, key indicator overnight. In fact, that did go to 50. It did come to around 27 odd. It ended closer towards that 30 odd mark. But in terms of the European markets, well, they didn't really recover considerably. From the lows, yes, they did. But at one point of time, those markets were trading with cuts of only around 1.5%. They ended down 2 to around 2.5%. Important to watch them today. Banks and some insurance stocks, they did sell off overnight. BNP Paribas came out with a set of numbers. Stock ended down close to around 3.5%. And Credit Suisse was down close to around 6%. Remember, overnight, the inverse volatility index, that didn't go according to, the planned trade. It did see a big collapse. And that stock, in fact, was down close to around 6%, though it said that they're not materially impacted by that. Emerging markets, it was a mixed bag. The Russian and the Brazilian index moved in different directions. And finally, Asian markets that you all are talking about, they are in the green today. That would mean the SGX Nifty will open up with a gain of around 110 points. Back to you.
Okay, well, that's as green can get. Thank you very much, Nigel, for that summary. We will, of course, have to keep an eye on the global markets. But this morning, we will also keep an eye on the domestic events. The Reserve Bank's monetary policy gets unveiled at 2:30 p.m. Ahead of that, we are joined by Deepali Bhargava, the economist from Credit Suisse. Morning, Deepali. Thanks much for joining us. What is the big thing that you are going to watch out for, action-wise and talk-wise?
Good morning. Hi. So I think, it's broadly a given that probably there will be no rate action today. But I think what's really important from today's policy is for RBI to highlight how significant the upside risks are on inflation, both from the changes that we're seeing on food prices, MSP, oil, as well as what they're thinking on the fiscal situation. So I think some comments, our view is that the comments should suggest that fiscal and inflation risks, as reflected in the bond yields right now, are exaggerated. I think especially on inflation, what's very relevant for this quarter is a sharp fall in vegetable prices. So the three notorious vegetables have actually crashed quite a bit in the last few days. So our estimate is that should in itself shave off about 40 to 50 basis points from headline CPI in the first quarter. Oil is definitely a risk, and RBI will probably be more cautious on the oil front. But then, again, the direct impact is limited. And even if you look at the indirect impact in terms of second round onto transportation costs, it's still very limited in CPI. MSP, the third risk which is being talked about, is still a very far-fetched risk. One, it's not impending because it comes into effect only in October. And two, what we've been highlighting really is that cost to markup. So MSPs, except for rice and a couple of pulses amongst the major crops, is actually the markup is over 50%. So that should not impact CPI in a very meaningful way.
Deepali, 1 minute. I'll just come back to your first sentence. You're saying that RBI must actually talk down the bond yields because they are over-discounting inflation fears. Is that your thesis?
Yeah, right. We think inflation will correct from these numbers. So the last reading was 5.2, and in the first quarter, we're expecting readings to be lower.
Okay.
That was my question, actually. What is your expectation as far as inflation is concerned? But coming back to the point that you made about, the RBI's guidance for CPI in FY19, what should we expect this time around? Will there be a change? And if yes, given the fact that we have higher MSP as well as higher oil, what are you looking at from the RBI's front?
I think first of all, they will revise the second half probably a bit for this year, just marking it to market because the last readings were a bit on the higher side. Other than that, I mean, I doubt they will give a trajectory which is very hawkish for FY19. I think probably keep it around 5%. So if you look at even how the consensus is moving on inflation, there is a sharp increase by about 60 basis points in consensus. But that kind of peaks out in June 18 and moderates from there on. So I think that should get reflected in RBI's commentary as well.
So what is your own March 2019 expectation? I mean, I guess the market told me that that's the number they will look at, March 2019 inflation.
Right, so March 2019 is still a tad below 5% because food inflation we think will come down. GST will continue to have some moderating impact on core CPI. And if you strip off all of these one-offs like housing, etc., we think the core is still around 4.5%. So our headline CPI is still below 5%.
Okay. Are you expecting anything else from the RBI with respect to the prospects of, say, OMO purchases because of the lack of appetite that's coming in for bonds from banks?
Yeah, there could be some hints to suggest some increase in FII debt limit. It'll be good to hear something on the recapitalization bonds, and if there is any hint that suggests that there could be some opening up of limits on the FII side on that front, or like you said, yes, OMOs. If there is any hint on OMO purchases, that'll actually be very meaningful for the bond market.
Actually, the DA secretary said in an ambush bite to reporters that they're going to consider the FII limits in April. That actually went down a bit negatively. This happened, I think, yesterday or day before. But Dipali, a final question. Will there be any comment on the last 72 hours of wild gyrations? Would you want to watch what the RBI says about the world in general?
I think they will. I think they will comment because the volatility is really high, and it's not just in the Indian markets, but across Asia. So I think that's one point they will try to highlight, that it's not just India specific, and it's across Asia. But not expect it to move INR or the rates in a very meaningful manner.
Non material to their policy. All right. Thank you very much, Dipali Bhargava, for joining us. So clearly, Dipali Bhargava belongs to the dovish camp. Yeah. There are others who are not so sanguine about inflation.